Well, markets are trading at record all time high territory, and hopes are high for them to continue to hit new highs on hopes of interest rates being cut, and also the insatiable demand that we're seeing that is pushing stocks to these levels. My name's Jessica Remy. I'm a market strategist with Moo, and you're tuned in to our special edition of the Daily. We're giving you an update around noon on this 5th day of June. It's great to see you. So, what we need to consider is that we've got the Aussie and the US economy is now growing weaker than expected. The Aussie economy, heck, it's hardly growing at all. We saw that yesterday with the data coming out from the Australian Bureau of Statistics, proving our economy is hardly puffing up. But we've got both share markets smashing new records. In fact, the Aussie share market today hit its highest level that we've seen since the kiss of death on February 14. After that day, we saw the share market fall away, didn't we? But we're back here, we're back at record all time highs. And now bets are rising for the market to continue to rise even further. What's also really encouraging investors to enter the local share market here is that we've got 60% of Australia's stocks actually pulling the market higher. So bullish momentum is expected to actually broaden out. And we could even see 70 to 80% of the ASX 200 companies join in on this rally that we've got right now. And we could see the market push above its 200-day moving averages. Then you'd expect the ASX 200 to hit unseen record highs. And bets are out there for the market to get to 8,800 points. In fact, today, as we said, the Aussie share market hit its highest level since Feb 14. So we got to a level of 8,534 points, or 35 points rather, in session. So that number again is 8,535. But now the market is trading at 8,334. Just bear with me, because all I'm simply telling you is if we are to move up from here, like the options market is suggesting, then the market could jump 3.75%. So out there, we've seen the most calls bought. The options are suggesting that the market could get to 8,850 points by June 19. But of course, markets don't go up in a straight line. Nothing is guaranteed except maybe your dinner this evening and Christmas and taxes. But currently, look, we do have Australia's big banks leading the market higher. We've also got gold stocks performing pretty strongly as well. Gold is not only being seen as a safe haven here, ladies and gents, but don't forget that gold is also rising for a different type of merit now. We've got the artificial intelligence revolution demand kicking in. And of course, that equates for about 10% of gold's demand. In case you didn't know, specifically quantum computing chips, AI chips, they use gold as well. What is also pulling the market higher, and you need to keep your eye on, are the other essential resources needed for the AI infrastructure build out. So, specifically, we're seeing new highs. In fact, we saw yesterday, we saw aluminium stocks that are essential in the AI build out. Alcoa, South 32, the locally listed Alcoa, I'm specifically speaking about here. That's the one on the screen. That's benefiting from aluminium prices moving higher just on the back of Donald Trump's tariffs that he introduced. Rounding it all out, speaking still about infrastructure now, other infrastructure resources needed are specifically uranium. So uranium stocks, they have been punching to new highs. We've got Paladin just flashed up on the screen for those that are tuning in on the podcast. So we're seeing carbon neutral energy companies, specifically, as I said, just uranium. We're seeing stocks like these hit new highs this week. And I guess this really goes back to the validation of uranium, once again being deemed as a critical, mineral, essential in keeping data centers running on 24/7 carbon neutral energy. And we saw that, we spoke about that in our daily a couple of days ago with Meta tapping Constellation Energy on the shoulders to essentially buy uranium directly from them to strap it into their data centers for the next 20 years. And of course, Constellation Energy is not the only a company to actually strike up a deal with a NASDAQ 100 company. Constellation Energy has got direct energy power supply agreements with Amazon and Microsoft as well. So think about that when you are thinking about uranium. But of course, you can't buy Constellation Energy on the ASX because that company, CEG, is listed in the US. So locally, how investors are playing this is by buying stocks like Paladin Energy and Boss. So keep your eye on those that are making considerable moves up. Indeed, they did yesterday. The other thing that I want you to consider is data centers. So we spoke about the broadening out of the market rally in the Australian share market, specifically what is pulling the ASX 200 higher. And so the final rung of that are the data centers. So data centers are locally that are moving higher, include NextDC and Megaport. So NextDC, we flash it on the screen. That stock has continued to run up higher and hit new highs of late. And indeed, it's now taken this year's gain to 83%. So well done if you have been buying into the pullback, because NextDCs are continuing to break higher. But do keep an eye on that. It doesn't mean that it will continue to rise up in a straight line. As we always say, stocks don't go up in a straight line. Now, just rounding this all out, I want you to think about something else. So we spoke about Australia and the US. The data is coming out now overnight. And yesterday, as we spoke about, the data is now showing that our economies are essentially buckling a little bit. And this is why calls are now mounting for central banks to step in and potentially cut interest rates. And so if this happens, this could potentially ignite another run-up in markets. Who knows? But the bottom line is, I want you to think about this. If the RBA does step in and cut interest rates in July, as expected, and if we do see the US dollar continue to fall, and of course, if we see our local company earnings continue to grow more than expected, we're seeing that in the US as well, with earnings growth in the S&P 500 up 12% year on year. NASDAQ 100 companies' earnings are up about 25% year on year. Look, if we see all of these pillars continue, then you'd expect the market to continue to rise and hit new record all-time highs. But that does not mean, ladies and gentlemen, markets will keep going up. So as always, you need to consider maybe taking some profits off the table if that is important to you, and your risk management. Remember, markets always tend to experience hiccups. They don't go up in a straight line. And thanks so much for joining us around lunchtime. Have a wonderful afternoon. Stay safe. Happy trading. We'll see you tomorrow.